Hey there, it's J-Rod here for Rich Retirement TV, and today I'm going to tell you why I think the Dow Jones Industrial Average could soar 20% or more before the end of the year here in 2021. And I've got some very cool charts here to help me tell the tale. Now, I'm a history buff. I like to look at what's happened in the past to give some kind of idea about what might happen in the future. And while history doesn't necessarily repeat itself, it most certainly rhymes, especially in the stock market. So what I've done is gone back to 1928, and I've pulled all of the Dow Jones Industrial Average data going back there, and I've basically taken the year 2021 through April 20th, and taken, going back through all those years and found the years that are most similar to 2021. And what I found was astonishing. I'm going to show you just a couple of charts here that really show you just what we can see here for the blue chip index here. But before I get into that, I want to show you just a couple of other analogs that show you just how powerful these types of correlation charts can be. So here we go. Here you are looking at the chart here of the Dow Jones from 87 against 1929, and as most of you are probably aware, the 1987 saw a major stock market crash, as did 1929. And you just look how similar these two charts are. Now, the correlation between the two of them is 0.82, which is about 80. That's 82%. Things don't match up perfectly, but if you had a roadmap of 1929 in front of you, and you were looking, in 1987, you could have put on a really nice short and rode it all the way down, and then closed out and rode it the way back up. Somebody actually did this. His name is Paul Tudor Jones, and he's a legend on Wall Street for having done this. He also is a student of history, and it doesn't just apply to, say 87. If you take a look at what happened in 2020, it actually was remarkably similar to what happened in 1980. The circumstances are different, right? But again, we see similarities here. It's huge crash here, pandemic related in 2020. And we see a similar drop-off here in 1980, but things really pick up right here in April and soar basically on through the end of the year. So two really good examples of both in the past and recently of where these correlation charts can really help you. So how does this work in 2021? Well, right now, 2021 is tracking very closely, and when I say very closely, I mean 94% correlation to 1995, which was one of the best years of the 1990s, economic boom. And as you can see here, very tightly correlated thus far. And we're looking at things are kind of uncertain right now. In 2021. We don't know if there's tax hikes coming, what earnings are going to look like, or, if this pandemic is actually going to go away or not. But, again, we just look at 95, you have a similar kind of situation where we're coming out of, big down drop, and you just take a look. Interest rates were much higher in 95 than they are now. Inflation was definitely still a thing in 95. So some of the obstacles that have held people back to owning stocks existed, if not even to a higher degree structurally in 95. Still a lot of upside here. The return through the end of the year was 21%, and the max gain from this point in 2020, in 1995 through the tippy top here was 24%. Big upside here, and as you can see here, from this point in 95. Stock market never looked back. We never came even close to to retouching the point here in say April 20th of 95. So let's take another year. 99. You take a look here. So the return through the rest of 1999 was 10%. Max gain also 10%, basically 10.1%. So we closed at the high of the year. Now, while this chart isn't straight up like 1995, you still have more upside here. Maybe a little bit of say summertime slump, but a great opportunity to buy here. Basically through May, from May through October, before stocks rally, the blue chips rally yet again. So let's take a look at another year. This is 2013, and I should have mentioned 1999 had a 91% correlation to what we're looking at in 2021. This here is 2013. Again, you get a nice, a similar pattern to 99 here, where we rally, we have a little bit of consolidation here, and then an explosion through year end, basically kicking off in October. Now in 2013, so the max gain here was 14%. The rest of the year return was also 14%. So we basically, as you can see we top out here at the end of the year at the top. And the last year I wanted to show you here is 1936. This year is basically towards the very end of the Great Depression, and we have a nice rally here. This might be a little scary, right? A drop off here in April and May that sees the market fall some 12%. But you've got this was a fantastic buying opportunity where the market rallied 20% off the low here in May. But more importantly, from this point in 1936, the market rallied, or the Dow rallied rather, to 18%, and the max gain on the year from this point in 36 through the tippy top, 21%. So in just a beautiful rally here, through basically April through the end of the year. So in 3 or 4 of these years, you got a really strong, price movement without any big drops. The exception here of 36. But remember, in 36, we're looking at the end of a very, very brutal recession, depression rather. And while we've seen, a brutal recession here in 2020/21, still wasn't. From an economic perspective, things were much, much worse back in 36 than they are in 21. So, there we go. We got 4 great years that show, at least 10% upside, if not 2 of these years, both 95 and 1936, show you returns, max returns possible of 20+%. So let's take a look here. Made a nice little Excel spreadsheet for you here to show you, but show you the top 10 years that look like, it should be 2021 here, but that look like 2021. You've got, in 9 out of 10 of the years that are most resemble 2021, you've got they're positive. In 9 out of 10 of the years, 90% positive returns through year end versus a 67% positive return rate for the average of all periods. And again, like we talked about earlier, we got 2 years that look like 2021 for the Dow, show 20+% upside through the year, 95 and max gain through the end of the year, and that's 95 and 36. But the thing I really want to show you here on this chart is you take a look, the rest of the year return. On average, the Dow in years like 2021 so far, an average return through the end of the year of 8.6%, so roughly 9% versus 4%, for the Dow in all other periods from April 20th through through the end of the year, going all the way back to 1928. So you got double almost the upside potential in years like 2021. And you take a look at the max. The max gain is a little bit less than what the average gain is, but in terms of max loss, the max loss from here through the end of the year in all other periods, in all periods, is nearly 10%. But in years like 2021, it's 5.7%. So better downside, so you got a higher floor and for a slightly lower max gain. But you take a look at some of these years, I don't think anybody would complain if we saw, a 20+% year like we saw in 95 and 36. So a lot to love here for the Dow Jones, so far in so far in 2021, and what we can potentially see through the rest of the year. Now, I have to mention, correlation is not causation, so I'm not saying that these things are definitely going to happen, but you know what? If we look at history as a roadmap, I like what I see, what the Dow is shaping up to look like through the year end. And as you saw in years 1987 and in 2020, using the past as an analog would give you some real foresight as to what the market could do. And as you saw, things worked out pretty nicely. And what we're looking at now is the same type of chart that could show you the way there for the rest of 2021. But so thanks so much for watching my video today. Please email me with questions, comments at askjrod@stpaulresearch.com, or leave me a comment here at the bottom of the video. I'm happy to hear from you. I'd love to chat. So thanks so much for watching again. I'm J. Rod for Rich Retirement TV, and I'll see you next week.